Hi, welcome back once again to Cbse Board Economics. I'm Saddam Hussain here. Today we'll be discussing yet another very important concept in national income accounting of macroeconomics, that is direct taxes, indirect taxes, and net indirect taxes. We are all familiar with taxes in India. We pay direct taxes to the government, like income tax, property tax, wealth tax, service tax. We pay indirect taxes to the government. There used to be a lot of indirect taxes. Now you just have GST, goods and services tax, and we'll be discussing about net indirect taxes. So today's topic will be direct taxes, indirect taxes, and net indirect taxes. These concepts will help you to understand the later topics in national income accounting. This will help you to measure national income accounting. It becomes much easier for you to find out national income by income method, product method, expenditure method. So let's start with direct taxes. How do you define direct taxes? We all pay direct taxes. I just told you, we pay income tax, we pay property tax, we pay house tax, we pay wealth tax, we pay service tax. These are all direct taxes. What exactly you mean by direct taxes? In case of direct taxes, the tax liability and the burden of the tax is on the same person. The tax liability and the incidence. Incidence means the burden of the tax will be on the same person. What exactly it means? We take an example. If your dad is earning hell of a lot, obviously the government imposes income tax on him. The tax liability is on your dad, and the burden will also be on your dad. He is liable to pay direct tax to the government. That's income tax. So how do you define direct taxes? In case of direct taxes, the tax liability and burden is on the same person. Income tax. If you have a property, you can't escape. You have to pay. You are liable to pay the tax. The liability and the burden is on you. That's a direct tax. In case of direct taxes, the tax liability and burden will be on the same person. What are indirect taxes? Now, earlier we used to have many indirect taxes. We used to have sales tax, we used to have excise duties, we used to have customs duties, we used to have TROI. Now all these indirect taxes have been summed up into one. Now we call it as GST. So there is just one indirect tax now, GST, goods and services tax. How do you define an indirect tax? Indirect taxes are those whose tax liability is on one, but the burden can be passed on to others. What it means, when you buy a pen in the market, the government imposes GST on the shopkeeper. The liability to pay the GST is on the shopkeeper, but he will pass on GST to you. That is, the burden is on you. So the burden is shifted. So in case of indirect taxes, the tax liability and burden is on different people. It is passed on. So in case of direct taxes, the tax liability and burden is on the same person. In case of indirect taxes, the tax liability and burden is on the same person. In case of direct taxes, the tax liability and burden is on the same person. In case of indirect taxes, the tax liability and burden is on different people. Now, to understand this, we'll see the difference between direct and indirect taxes. So when they ask you difference, please put the points in tabular form. The first point which I just told you is, in case of direct taxes, the tax liability and the burden is on the same person. In case of indirect taxes, the tax liability and the burden will be on different persons. That is, the tax liability as the shopkeeper, but he will pass it on to the consumers who will buy the product from him. The second point is direct taxes can't be escaped. Direct taxes can't be escaped. Why it can't be escaped? When you're earning a huge income, you are liable to pay income tax. You can't escape. If you have a property, you are liable to pay property tax, wealth tax. So you can't escape direct taxes. But indirect taxes can't be escaped. How do you escape? Legally, we're talking about how do you escape. Don't buy a commodity, you don't have to pay GST. Don't go to see a movie. So earlier we used to have entertainment tax, you don't have to pay GST. Don't buy luxury goods, you don't have to pay GST. You can escape. So direct taxes can't be escaped, but indirect taxes can be escaped. So the direct taxes are imposed on the income and wealth of people. Indirect taxes are imposed only when you spend that income. That is on your expenditure. Otherwise, you don't have to spend. Then after this, the fourth point, you write it as an example. In case of direct taxes, income tax, property tax, wealth tax. In case of indirect taxes, you just write GST, goods and services tax. Now we have the next one. What are net indirect taxes? This is not something new. What is NIT? Net indirect taxes, NIT. This will help you in numericals. Please follow it carefully. NIT is nothing but net indirect taxes. It's a difference between indirect taxes and subsidies. What are subsidies? Subsidies are grants given by the government to households or firms. Subsidies are grants given. So what is net indirect taxes? NIT is indirect taxes minus subsidies. Subsidies are grants. Maybe the government provides grants to the exporters to promote exports and earn more foreign exchange for the country. Subsidies are given to shopkeepers or the firms to sell the commodities at less prices to poor people, and subsidies are given to poor farmers. And there are all kinds of subsidies are there which the government gives as a welfare measure. So subsidies are kind of grants given to households or the firms. Mind it, subsidies always reduce the price of the commodity. When the government gives a subsidized price, so in the ration shops or fair price shops, you get commodities at cheaper prices because they are getting lot of subsidies. Those are the subsidies. What is NIT, net indirect taxes? NIT is indirect taxes minus subsidies. Suppose indirect taxes are 10% and the government has given you a subsidy of 2%, so then you just have to pay 8%. NIT is equal to IT minus subsidies. Now they can ask you, can NIT be zero? Yes, NIT can be zero when indirect taxes are equal to subsidies. NIT can be zero when indirect taxes are equivalent to subsidies. Suppose the government has imposed 5% tax and the government has given you 5% subsidies, NIT will be zero. Can NIT be positive? Yes, oftentimes we see NIT is positive when indirect taxes are more than subsidies. When indirect taxes or NIT will be positive. Can NIT be negative? Yes, it can happen in case of farmers. So farmers don't have to pay any taxes, but they get a lot of subsidies. So in that case, the NIT will be negative. NIT will be negative when subsidies are greater than the taxes. So once again, I'll just tell you, can NIT be 0? Yes, NIT can be 0 when indirect taxes are equivalent to subsidy. NIT is equal to IT minus subsidies. If indirect taxes are 10% and subsidies are 10%, so NIT will be 0. Can NIT be positive? Yes, when indirect taxes are more than subsidies, the government has imposed indirect tax of 10% and the government has given you 2% tax. In that case, NIT will be positive, NIT will be 8%. Can NIT be negative? Yes, when subsidies are more than indirect taxes. Suppose the government has imposed 10% tax on the commodity and the government has given you 15% subsidy, 5% subsidy. In that case, no, not that. So can NIT be negative? Yes, NIT can be negative. The government has given you 10% subsidy and imposed 5% tax. In that case, NIT will be negative. So it will be minus 5. So that's all we have in this chapter. So we'll revise once again what are direct taxes in simple words. Direct tax, in case of direct taxes, the tax liability and burden is on the same person. Direct taxes cannot be escaped. Income tax, property tax, wealth tax. What are indirect taxes? In case of indirect taxes, the tax liability and the burden will be on different persons. So indirect taxes will be GST. Indirect taxes can be escaped by not consuming the commodities. Then you have what is NIT, net indirect taxes? NIT is the difference between indirect taxes and subsidies. So we can add one more question here. What are defined subsidies? Subsidies are grants given to the households or enterprises. Subsidies always reduce the price of the commodities. Subsidies are given to exporters to promote exports, or subsidies are given to firms to develop some underdeveloped regions. Subsidies are given to farmers. So subsidies always reduce the price of the commodity. So NIT is equal to indirect taxes minus subsidies. Can NIT be 0? Yes, when indirect taxes are equal to subsidies. Can NIT be positive? Yes, when indirect taxes are greater than subsidies. Can NIT be negative? Yes, when subsidies are greater than indirect taxes. That's all we have time for today. Thank you so much. I'm Saddam Hussain. Till we meet next time, keep watching all the videos. Don't forget to subscribe, share, like, and comment. All the best for your board exams. Goodbye.